They told you to be curious, to be a lifelong learner, to expand your horizons, to read widely, to become a Renaissance man for the digital age. They sold you an image of the successful individual as a polymath, a human nexus of information, able to converse intelligently on any topic, from macroeconomic policy to the latest technological breakthrough. They painted a picture of a vast, open frontier of knowledge and told you that your mission was to explore as much of it as possible. They implied that the more dots you collected, the more you knew about the world, the more powerful and effective you would become. This idea, this seductive call to intellectual manifest destiny, is one of the most debilitating lies ever told to the ambitious. It is a psychological operating system that guarantees distraction, dissipates your most precious resource, your cognitive energy, and ultimately leads to a state of profound and permanent mediocrity. Because the man whose face is synonymous with financial genius, the individual who has compounded wealth on a scale that defies comprehension, did not build his empire by knowing more than everyone else. He built it by knowing almost nothing. He built it through a process of ruthless, systematic, and strategic ignorance. Warren Buffett's $90 billion fortune is not a monument to the vastness of his intellect. It is a fortress, built on a tiny, well-defined patch of ground, and defended by a profound and unwavering commitment to ignoring 99.9% of the universe. While you have been taught to be an explorer, charting the vast unknown, he has been a fortress keeper, obsessively polishing every stone of his small, impenetrable keep. While you have been encouraged to collect 1,000,000 dots of information, he has spent 60 years connecting the same 3 dots over and over again until his understanding of them became absolute. His great secret is not intellectual horsepower, it is intellectual containment. He did not win by playing the game better than anyone else. He won by redesigning the game itself, defining a playing field so small, so specific, so perfectly tailored to his own mind, that on that field he could not lose. This is not a documentary about what Warren Buffett knows. This is a deconstruction of how he decides what is worth knowing. We are about to dismantle the myth of the polymath and hand you the blueprints for a completely different system. A system based on the counterintuitive and world-changing power of the cognitive fence. A weapon he gives a deceptively simple name: the Circle of Competence. But you will come to understand it as the master algorithm for converting focused knowledge into unimaginable power. Prepare to stop being an explorer, lost in the infinite wilderness of information. It's time to become the architect of your own cognitive fortress. The year is 1999. The world is gripped by a fever. A new religion is sweeping the globe, promising salvation, reinvention, and unimaginable riches. Its temples are the glowing screens of computer monitors. Its priests are 20-something entrepreneurs in hoodies and sandals. Its gospel is written in the language of eyeballs, click-through rates, and burn rates. It is the height of the dot-com bubble, and for a moment, it feels as if the fundamental laws of economics have been repealed. Companies with no profits, no tangible assets, and often no coherent business model are achieving market valuations in the billions of dollars. A company called theglobe.com, a primitive social networking site, goes public, and its stock soars 606% on the first day of trading. Pets.com, a company that sells pet supplies online, raises $82 million from investors, despite the fact that it is losing money on almost every bag of dog food it sells due to shipping costs. The logic of the old world is dead. This is a new paradigm. It's about growth at all costs. It's about getting big fast. It's about capturing the future. The financial media, the supposed guardians of rational thought, are the most fervent converts to this new faith. They mock the old guard, the so-called dinosaur investors, who still talk about quaint, antiquated concepts like earnings and cash flow. And their favorite dinosaur, their ultimate symbol of a bygone era, is Warren Buffett. In the heart of Omaha, Nebraska, Far from the manic energy of Silicon Valley and Wall Street, Buffett is watching this global frenzy with a quiet, almost serene detachment. His company, Berkshire Hathaway, is dramatically underperforming the market. While technology stocks are doubling and tripling in a matter of months, Berkshire stock is languishing. The headlines are brutal. A Barron's cover story in late 1999, titled, "What's Wrong, Warren?" declares him washed up. It argues that his old-fashioned value investing principles are irrelevant in this new technology-driven economy. He is a relic, a man who has lost his touch, a king who does not understand the new language of his kingdom. The pressure is immense. His own shareholders are questioning him. Pundits are openly mocking him. He is being offered a front-row seat at the greatest party in financial history, and he is politely, stubbornly refusing to attend. What was his reason? Did he have some secret analysis that proved the bubble was about to burst? Did he possess a more sophisticated model that showed these valuations were insane? The truth is far simpler and far more profound. His reason for avoiding the entire dot-com mania, the single decision that would preserve his capital while the rest of the world was incinerating theirs, was three simple words. I don't understand. That's it. That was the entirety of his complex analysis. He didn't understand how to value these new internet companies. He couldn't look out 10 or 20 years and have any degree of confidence in what their earnings would be, or even what the competitive landscape would look like. The entire sector was a mystery to him, and because it was a mystery, he simply did nothing. He stayed on his own tiny, well-understood patch of ground. He continued to buy shares in companies that sold bricks, carpets, insurance, and soda pop businesses he understood. Businesses whose futures, while never certain, were at least predictable within a reasonable range of outcomes. To the outside world, this looked like fear, like stubbornness, like an old man's inability to adapt. But it was none of those things. It was the disciplined, methodical execution of his most powerful mental model. It was the unwavering defense of his circle of competence. He wasn't making a prediction that the technology sector would crash. He was making a statement about the limits of his own knowledge. He had drawn a small circle around the handful of industries he could understand with absolute clarity, and he had made a sacred vow to himself never to venture outside of it, no matter how tempting the sirens call, no matter how great the party raging just beyond the fence. When the bubble inevitably imploded, starting in March of 2000, it was a cataclysm. The Nasdaq index, a proxy for the tech sector, lost nearly 80% of its value. Trillions of dollars of phantom wealth evaporated. The high priests of the new paradigm were exposed as charlatans. The companies that were supposed to change the world went bankrupt. And Warren Buffett, the dinosaur, the relic, was left standing, his fortress of capital untouched, ready to deploy it into the wreckage at bargain prices. This story is the foundational text for this entire documentary. It is the ultimate parable of the power of intellectual containment. It demonstrates a complete rejection of the pressure to be a polymath and a total embrace of the power of focused expertise. It reveals a mindset that thrives not on knowing everything, but on knowing, with absolute certainty, the precise boundaries of your own ignorance. The world calls his decision not to invest in the dot-com bubble a brilliant move, but that word, brilliant, implies a flash of genius, a moment of divine foresight. It was the opposite. It was a humble, almost pedestrian act of self-awareness. It was the methodical application of a psychological operating system that you can learn, that you can install, and that we will now piece by piece reveal. Welcome to Part 1. The myth of the polymath and the tyranny of the open field. Our modern culture is obsessed with the idea of the multi-talented genius, the individual who excels across a wide range of disciplines. We celebrate figures like Leonardo da Vinci, who was a master painter, sculptor, architect, musician, scientist, and inventor. We are fed a constant diet of articles and books with titles like How to Be a Modern Renaissance Man, or Why Generalists Triumph in a Specialized World. The message is clear. More knowledge is better. A wider range of skills is better. The ability to collect and synthesize information from disparate fields is the key to success in the complex, interconnected world of the 21st century. This philosophy, while appealing, is a psychological trap. It creates a cognitive state that we will call the tyranny of the open field. Imagine you are a general, and you are told your objective is to defend a vast, open plain with no natural barriers. You have a finite number of soldiers. Where do you place them? You are forced to spread your forces thin, trying to cover every possible angle of attack. A small patrol here, a small outpost there. Your army is everywhere and nowhere. You have no concentration of force. You are vulnerable at every single point. A disciplined enemy, with an equal number of soldiers, does not have to defend the entire plain. They only have to choose one point of your thinly stretched line, concentrate all of their force on that single point, and they will break through with ease. This is the strategic reality of the intellectual polymath or generalist in the hyper-competitive modern world. By trying to know a little bit about everything, you spread your cognitive resources, your time, your attention, your mental energy, so thin that you have no real depth in anything. You become a financial tourist. You can speak the basic language of many different industries, but you are not fluent in any of them. You can recognize the famous landmarks, but you don't know the back alleys where the real business gets done. You are constantly moving, constantly exploring, but you never settle down and build anything of lasting value. This state of perpetual exploration is fueled by a series of powerful cognitive biases. The first is what we can call the novelty bias. Our brains are wired to be drawn to new and exciting information. In our evolutionary past, a new sound or a new sight could signal a threat or an opportunity, and paying attention to it was a survival advantage. In the modern world, this ancient wiring is hijacked by the infinite novelty machine of the internet and the financial media. Every day, there is a new hot stock, a new revolutionary technology, a new geopolitical crisis that demands your attention. This constant stream of novelty provides a dopamine hit, making us feel informed and engaged, when in reality, we are just being distracted. We mistake the consumption of information for the acquisition of knowledge. The second bias is the fear of missing out, or FOMO. When we see others getting rich in a sector we don't understand, like .com stocks in 1999 or cryptocurrencies in more recent times, it triggers a powerful social anxiety. We fear being left behind. We fear looking foolish for sticking to our old, boring methods. This fear is a powerful motivator that pushes us out of our areas of expertise and into the open field of speculation. We abandon the solid ground of what we know for the treacherous swamp of what is popular, convincing ourselves that this time it's different, and that we can learn as we go. The third, and most insidious, is the illusion of knowledge. The internet has made it possible to acquire a superficial understanding of almost any topic in a matter of minutes. We can read a Wikipedia article, watch a few YouTube videos, and skim a few articles, and we start to feel like we understand a subject. This is a dangerous illusion. It is the difference between being able to read a map of a city and actually living there for 20 years. The tourist with the map thinks he knows the city. The resident knows its rhythms, its secrets, its hidden dangers. The financial tourist, armed with a few hours of internet research, believes he understands a company or an industry. He mistakes this superficial familiarity for genuine competence. This toxic cocktail of biases, novelty, FOMO, and the illusion of knowledge keeps the ambitious individual trapped in the tyranny of the open field. They are constantly chasing the next new thing, constantly spreading their mental energy thinner and thinner, constantly operating with a dangerous and unacknowledged knowledge deficit. They are the general, with his soldiers scattered across the plain, convinced that their broad coverage is a strength, oblivious to the fact that it is the very source of their vulnerability. Warren Buffett's first and most profound act of genius was to completely reject this entire paradigm. He understood, at a cellular level, that the game of investing is not won by having the broadest knowledge base. It is won by having the deepest. He made a conscious, strategic decision to abandon the vast open plain and instead build a fortress on a small, defensible hill. He refused to be a general with a scattered army. He chose to be a king in an impregnable castle. This brings us to the central metaphor of this documentary, the tourist versus the sovereign. The tourist is the quintessential modern investor. He is intelligent, curious, and well-read. He subscribes to the Wall Street Journal, he watches financial news, he has a portfolio of stocks from a dozen different industries. He can tell you about the promise of gene editing, the future of artificial intelligence, and the dynamics of the global oil market. He is a collector of dots. His core activity is information gathering. His goal is to be informed. He believes that by knowing a little about a lot, he can make better decisions. But his knowledge is a mile wide and an inch deep. He doesn't truly understand the competitive dynamics of any single industry. He has never read the 10K reports of his companies from cover to cover. He does not know the names of the key suppliers or the major customers. His understanding is an abstraction, a narrative gleaned from headlines and analyst reports. When a crisis hits one of his companies, his knowledge is too shallow to provide any real conviction. He doesn't have a firm anchor of intrinsic value to hold on to. He is at the mercy of the market's emotional tides. His only guide is the price of the stock and the opinions of other tourists. He is, in essence, a leaf in the wind. The sovereign, on the other hand, operates from a completely different set of principles. The sovereign is not a collector of dots. He is a master of a single dot. He has chosen his small territory, his kingdom, and his entire intellectual life is dedicated to understanding it with an obsessive, all-consuming depth. He might know nothing about biotechnology or software, but he knows everything there is to know about the railroad industry or the insurance market or the business of selling branded consumer goods. He has read every book, every trade publication, every annual report related to his industry for the past 50 years. He knows the history, the key players, the economics, the culture. His knowledge is not an abstraction. It is a rich, textured, multi-layered reality. His goal is not to be informed, it is to understand. When a crisis hits a company within his kingdom, he does not panic. He is not guided by the headlines or the stock price. He is guided by his deep, foundational knowledge. He can distinguish between a temporary problem and a permanent impairment of the business. He can see the fear of the tourists as an opportunity to expand his holdings within his own kingdom at a lower price. He is not a leaf in the wind. He is the mountain that stands firm while the wind howls around it. Buffett's entire career has been a masterclass in being a cognitive sovereign. He chose his kingdoms early on: insurance, banking, media, and simple branded consumer goods. These were his territories. He spent decades achieving a level of understanding in these areas that was orders of magnitude deeper than any Wall Street analyst. His refusal to invest in the dot-com bubble was not a failure to adapt. It was the ultimate act of a sovereign defending the borders of his kingdom. He knew that in the world of technology, he would be a mere tourist, vulnerable and ignorant. He chose to remain on the ground where his knowledge gave him an insurmountable edge. The profound lesson here is that you must make a choice. You cannot be both a tourist and a sovereign. The cognitive energy required to be a sovereign in one domain makes it impossible to be even a competent tourist in many others. The pursuit of breadth is the enemy of depth. You must have the courage to be ignorant. You must have the discipline to say no to the siren song of novelty. You must consciously and deliberately choose your small hill, and then dedicate your life to fortifying it. In the coming chapters, we will provide the detailed schematics for building this fortress. We will deconstruct the three great pillars of the Circle of Competence. But first, you must answer a fundamental question. Will you continue to wander the open field, a perpetual tourist in the world of value? Or will you choose your ground, plant your flag, and begin the hard, focused work of becoming a sovereign? Welcome to Part 2, the cognitive fence. A fortress is defined by its walls. The walls serve a dual purpose. They keep the valuable things in, and they keep the dangerous things out. The Circle of Competence is a cognitive fortress, and its walls are constructed from three distinct but interlocking materials: deep, earned knowledge, profound intellectual humility, and a ruthless, systematic filtering process. It is a fence that contains your focus and protects you from the infinite chaos of the outside world. We will now deconstruct this fortress into its three primary pillars. Each pillar is a discipline in its own right, and together they create a state of supreme decision-making clarity. The first and most foundational of these pillars is the knowledge fortress. This is the what of the Circle of Competence. It defines the actual territory you are claiming as your own. But it is crucial to understand what knowledge means in this context. It is not academic knowledge. It is not trivia. It is not the ability to recite facts and figures. It is what Charlie Munger calls worldly wisdom, a deep, practical, multidisciplinary understanding of the core drivers of a business and an industry. It is earned knowledge, forged in the fires of obsessive curiosity and years of focused study. Building this fortress requires a rejection of passive information consumption and an embrace of active, deep learning. You do not build it by skimming headlines. You build it by reading 500 pages a day, as Buffett does. You build it by devouring annual reports, trade journals, and biographies of the great business leaders in your chosen industry. You are not trying to learn what Wall Street thinks about the industry. You are trying to understand the industry so well that Wall Street's opinion becomes an amusing but irrelevant distraction. The core characteristic of a business that belongs inside a true knowledge fortress is predictability. Buffett is not looking for businesses that are going to change the world in a revolutionary way. He is looking for businesses whose fundamental reality will be largely unchanged in 10, 20, or even 50 years. He famously asks a simple question: will the internet change how you chew gum? For a company like Wrigley's, the answer is no. People will continue to chew gum, they will continue to be drawn to established brands, and the company will continue to generate cash. The business is simple, stable, and understandable. Its future is within a predictable range of outcomes. Contrast this with a social media company. What will the competitive landscape look like in 10 years? Will the dominant platform of today still exist? Will a new technology emerge and make it obsolete? The range of possible outcomes is enormous. The business is, by its nature, unpredictable. For Buffett, this places it firmly outside his knowledge fortress. Predictability is the key. You are looking for a business that operates on fundamental human needs and desires that do not change over time. The story of Buffett's investment in Coca-Cola is the quintessential example of the knowledge fortress in action. He first bought the stock in 1988, after the market crash of 1987, but his research began decades earlier. He had been a consumer of the product since he was a child. He had observed its power firsthand. He saw people all over the world, in different cultures and different economic conditions, who were willing to pay a small premium for the simple pleasure of drinking a Coke. He studied the company's history. He understood the brilliance of its franchise model, which outsourced the capital-intensive work of bottling and distribution, allowing the parent company to exist as a high-margin toll bridge on every sale. He calculated the per capita consumption of Coke in various countries and saw a massive runway for growth as developing nations became wealthier. His understanding was not based on a complex financial model. It was based on a simple, observable, and enduring reality. The business had a powerful, global brand, an intangible asset that created a formidable economic moat. Its product was a low-cost, non-discretionary purchase that created a habitual, repeatable revenue stream. He could look out 50 years and be reasonably certain that people would still be drinking Coca-Cola. The business was squarely in the center of his knowledge fortress. When the 1987 crash provided him with an opportunity to buy this predictable, high-quality business at a reasonable price, the decision was automatic. He didn't need to predict the future of the economy or the stock market. He only needed to be right about the enduring appeal of sugar water. He invested over $1 billion, making it one of his largest investments ever. The knowledge fortress provides the conviction to act decisively when an opportunity arises within your chosen territory. Because your understanding is so deep, you can recognize a bargain when you see one, and you are not paralyzed by the fear and uncertainty that grips the minds of the financial tourists. But building the fortress is not enough. You must also have the discipline to stay within its walls. This brings us to the second pillar, the one that provides the fortress with its psychological integrity, the humility moat. The humility moat is the why of the Circle of Competence. It is the active, conscious, and relentless acknowledgement of your own ignorance. It is the ability to say, "I don't know," and to treat those three words not as a sign of weakness, but as the cornerstone of your intellectual strength. This is perhaps the most difficult discipline to cultivate. Our egos, our educational system, and our professional lives all conspire to make us pretend that we know more than we do. We are rewarded for having confident answers, for projecting an aura of certainty. To admit ignorance is to make oneself vulnerable. But in the world of investing, the failure to admit ignorance is the single greatest source of catastrophe. The Dunning-Kruger effect, a well-documented cognitive bias, describes the phenomenon where people with low ability at a task overestimate their ability. In other words, the most incompetent people are often the most confident. The financial world is a massive, real-world laboratory for the Dunning-Kruger effect. Amateurs, armed with a brokerage app and a few hot tips, wade into complex markets with a level of confidence that would terrify a seasoned professional. They mistake their initial good luck in a bull market for skill, and they are inevitably wiped out when the tide turns. The humility moat is the antidote to this. It is a system for constantly stress-testing your own confidence. It is the inner voice that constantly whispers, "What if you're wrong? What could you be missing? What are the weak points in your argument?" A person with a strong humility moat actively seeks out disconfirming evidence. When they have an investment thesis, they don't just look for information that supports it. They make a special effort to find the most intelligent, articulate arguments against it. This is the opposite of confirmation bias, which is our natural tendency to seek out information that validates our existing beliefs. Buffett and Munger are masters of this. They famously use a technique of inversion. When they are analyzing a potential investment, they don't just ask, "How can this succeed?" They spend most of their time asking, "How can this fail?" They try to identify all the possible ways the business could be destroyed, and only if they can't find any do they proceed. This is the humility moat in action. It is a pessimistic, paranoid process of assuming you are wrong and forcing yourself to prove otherwise. The story of long-term capital management, LTCM, in the late 1990s is the ultimate cautionary tale of a fortress with no humility moat. LTCM was a hedge fund founded by some of the most brilliant minds in finance, including two Nobel Prize-winning economists. They built incredibly complex quantitative models that they believed could predict and exploit tiny inefficiencies in the global bond markets. Their intellectual arrogance was legendary. They believed their models were so sophisticated that they had essentially eliminated risk. They had a knowledge fortress. Their understanding of mathematics was second to none. But they had zero humility moat. They believed their intelligence made them infallible. They placed massive, leveraged bets based on their models, predictions. For a few years, they generated spectacular returns. But in 1998, an unforeseen event, a Russian debt default, triggered a global financial panic that their models had not predicted. The market correlations they assumed were stable broke down completely. Their fortress, built on the arrogant assumption of predictability, crumbled in a matter of weeks. The fund lost over $4 billion and came so close to collapsing the entire global financial system that the Federal Reserve had to orchestrate a massive bailout. The lesson is stark. Intellect is not a substitute for humility. A high IQ can actually be a disadvantage if it leads to an overestimation of your own predictive abilities. The humility moat is the psychological governor that keeps your intellect in check. It is the understanding that the world is infinitely more complex, random, and unpredictable than any model you can build. It is what keeps you inside your small circle of true competence, because you are deeply, profoundly aware of the dangers that lurk in the vast wilderness of your own ignorance. You have now defined what you know, the knowledge fortress, and accepted the vastness of what you don't, the humility moat. But the world will not respect your boundaries. It will constantly try to breach your walls with new ideas, new opportunities, and new distractions. This requires a third, active defense system. This brings us to the final pillar, the opportunity filter. The opportunity filter is the how of the circle of competence. It is the practical, day-to-day system for enforcing the boundaries you have set. It is a ruthless mechanism for saying no to 999 out of every 1,000 ideas that come your way. Buffett has famously said, "The difference between successful people and really successful people is that really successful people say no to almost everything." The opportunity filter is the operationalization of this philosophy. Think of your attention as a finite resource like a bucket of water. Every day, the world tries to poke holes in your bucket. A news alert, an email, a stock tip from a friend, a new can't-miss investment opportunity. Each one is a small leak. The average person's bucket is riddled with holes, their cognitive energy constantly draining away into 1,000 different distractions. The opportunity filter is a system for plugging those holes. It is a pre-commitment to ignore entire categories of information. Because you have already defined your knowledge fortress, you can automatically reject any input that falls outside of it. A new biotech stock with a revolutionary cancer drug? If biotechnology is not within your circle, you don't spend 1 second of mental energy on it. The headline is ignored, the email is deleted, the conversation is changed. It's not a difficult decision that requires willpower. It's an automatic, reflexive action based on a predefined rule. This is a profound shift. You move from a reactive state, where you are constantly evaluating the merits of incoming information, to a proactive state, where your system filters the information for you. This preserves your finite bucket of cognitive energy for the 1 or 2 opportunities a year that fall squarely within your circle. When such an opportunity appears, you can deploy your full, undivided attention to it, while others are still busy trying to process the fire hose of irrelevant noise. The way Buffett and Munger structure their lives is a testament to this principle. They do not have their days filled with meetings. They do not have screens flashing stock quotes in their offices. They spend the vast majority of their time sitting in a chair and reading. They are not gathering new information in a frantic way. They are slowly, methodically deepening their understanding within their predefined circles. They are protecting their cognitive buckets with an almost fanatical devotion. Buffett describes his investment approach as being like a baseball player who gets to stand at the plate with no called strikes. He can wait and wait and wait for the perfect pitch to come right down the middle of the plate. The dot-com stocks were a pitch in the dirt. The complex derivatives were a pitch over his head. He just lets them go by. The market, the other players, the crowd in the stands, they are all screaming at him to swing, you bum! But he ignores them. He is waiting for that one perfect, slow pitch. The Coca-Cola in 1988, the American Express in 1964, and when he sees it, he swings with the full force of his capital. The opportunity filter is the discipline of waiting for that perfect pitch. It requires a level of patience that is almost superhuman in our instant gratification culture. But it is the key to converting deep knowledge into extraordinary results. The 3 pillars are now complete. The knowledge fortress defines your territory. The humility moat provides the psychological discipline to stay within it. The opportunity filter is the active defense system that repels all distractions. Together they form a cognitive fence, a self-reinforcing system of focus and clarity. You know what you know what you don't know, and you have a system for ignoring everything else. You are no longer a tourist wandering a vast open field. You are a sovereign, secure within your small, well-defended, and deeply understood kingdom. You have achieved a state of cognitive containment. But a fortress is only as strong as its ability to withstand a siege. Its true character is revealed not in times of peace, but in times of war. Welcome to Part 3, The Fortress Under Siege. A military fortress is built for one purpose: to survive an attack. Its design, its materials, its very existence are all predicated on the assumption that a period of extreme stress and violence is inevitable. A cognitive fortress is no different. Its true value is not apparent on a calm, sunny day in a bull market. Its full power is only unleashed during the chaos and terror of a market crash, a speculative mania, or a prolonged period of underperformance. It is in these moments of extreme psychological pressure that the fortress reveals itself as a survival mechanism of unparalleled power. The dot-com bubble of the late 1990s was perhaps the greatest siege ever laid upon the fortress of value investing. It was not just a financial event, it was a cultural and psychological war. The old world of tangible assets and predictable earnings was pitted against a new world of infinite growth and digital promises. For investors like Warren Buffett, who refused to abandon their principles, it was a multi-year onslaught. Let us return to that period from 1997 to early 2000. But this time, let's experience it not as a historical case study, but as a real-time psychological ordeal. Imagine you are a value investor in 1997. You have built your portfolio according to the principles of the Circle of Competence. You own shares in solid, understandable businesses like Coca-Cola, Gillette, and the Washington Post. You understand these companies. You are confident in their long-term prospects. Then, the mania begins. A company called Amazon.com, which sells books online and is losing vast sums of money, sees its stock price multiply. A company called Yahoo, a web portal, achieves a market capitalization greater than that of the Walt Disney Company. You look at these businesses. You try to apply your analytical framework. You cannot project their earnings. You cannot understand their competitive advantages. They are far outside your circle of competence. So following the rules of your system, you do nothing. You ignore them. But then, the pressure starts to build. Your friends, your family, your colleagues are all getting rich. Your neighbor, who knows nothing about investing, has tripled his money on a stock called Qualcomm. The media is filled with stories of instant millionaires. Every day, the market seems to validate the new paradigm and punish your prudence. Your own portfolio, filled with your boring old economy stocks, is flat or even down. Coca-Cola is struggling with international growth. Gillette is facing currency headwinds. Your fortress is beginning to look less like a source of strength and more like a prison. This is the first wave of the attack, the psychological warfare of social proof and envy. Your humility moat is under direct assault. The temptation to doubt yourself is immense. Maybe I'm the one who's wrong, you think. Maybe the world really has changed. Maybe I'm just a dinosaur who doesn't get it. This is the moment where the tourist capitulates. He abandons his shallowly held principles and joins the mob, driven by the fear of being left behind. But the sovereign, secure within his fortress, holds the line. He reminds himself that his job is not to keep up with his neighbor. His job is to manage risk and compound capital rationally over a lifetime. He accepts the short-term pain of underperformance as the price of long-term survival. He trusts his system. Then comes the second wave of the attack, the assault of the expert class. The financial media, the Wall Street analysts, the so-called thought leaders, they begin to turn on you. They produce sophisticated arguments for why this time is different. They invent new valuation metrics like price to eyeballs to justify the insane prices of the new era stocks. They publicly mock the principles you hold dear. The Barron's article, "What's Wrong, Warren?" was the culmination of this. It wasn't just a critique, it was an intellectual obituary. The high priests of finance were declaring your God dead. This is an attack on your knowledge fortress. It is a concerted effort to undermine the very foundation of your understanding. The world is screaming at you that the laws of economics as you understand them have been repealed. The temptation to believe them is overwhelming. Perhaps your knowledge is outdated. Perhaps your fortress is built on sand. This is where the depth of your earned knowledge becomes critical. The sovereign, unlike the tourist, has not just learned a set of rules. He has internalized a deep understanding of business history and human nature. He has read about the Dutch tulip mania of the 1630s, the South Sea bubble of the 1720s, the Nifty 50 bubble of the 1970s. He recognizes the psychological patterns. He sees that the language of the new paradigm is the same language that has been used to justify every speculative bubble in history. His deep knowledge acts as an anchor, holding him firm against the hurricane of intellectual fashion. He trusts the lessons of history over the pronouncements of the moment. The siege continues for years. Your underperformance is not a blip. It is a chronic condition. You are tested every single day. The desire to give in, to just buy one tech stock,